We have legendary Stanley Druckenmiller, GOAT level all-timer status, talking about what he believes is going to happen in 2023. And believe me, you do not want to miss this. Let's get started.
Stan, we have been discussing in Oslo inflation, energy, AI, chips, geopolitics, and so on. So when you put your investing hat on, what's at the top of your mind?
The top of my mind, first of all, it's good to see you, Nikolai. I would guess the top of my mind is just how uncertain for me trying to analyze the environment is going forward. I've been doing this for 45 years. I've studied a lot of economic history, but I've never had a situation where you had free money, 11 years, a very broad asset bubble, followed by jacking up rates 500 basis points.
Think about how insane that is. Wow, what a hard environment to figure out. It's a massive whipsaw. Market goes, whoop, money print goes, whoop, everything goes up, and everyone's hitting the brakes super hard. So what he's going to say next in the rest of this talk here, in the rest of this interview, you do not want to miss it. Because who are you going to look for other than legendary Stanley Druckenmiller? I mean, GOAT level guy, talking about what's going to happen in 2023 the way he sees it in terms of probabilities. If, believe me, everyone in the investing world looks to what this guy says.
In 12 months. So for someone like me who likes to look at history and come up with potential scenarios, this is a particularly difficult period. 2 years ago wasn't so difficult when you had 2 years at 15 basis points and money's probably growing at 30. It didn't take a genius to figure out that was a good risk reward. These days things are a lot more complicated, but you just mentioned about everything on our mind. Generative AI, inflation is on our mind, asset bubbles, currencies, all the stuff we usually think about.
So how do you navigate it then?
Well, luckily I don't have any clients, so I don't have.
Well, I have one client and it's pretty big.
It's really big. I don't feel performance pressure. So historically, I deal in 5 or 6 asset buckets. Tends to keep me out of trouble in terms of playing in an area where I shouldn't be playing at a particular time.
Think about how wise that is. And what he says next about his method to investing, it really stuck with me. It really rung with me. And I thought, damn, there's some real wisdom behind that, what he's going to say next, his investing style. But I just wanted to sum that up for you.
And I think it's one of the most important things to do is not to play when you don't see a fat pitch. I don't see a fat pitch in fixed income. It's extremely complicated because I'm in the hard landing camp, probably sometime later this year.
He just said it. Hard landing camp somewhere in the next year. And what he goes on to talk about why is absolutely, it's just gold.
Again, this is so complicated, I'm not willing to place a big bet. And even if I believe in a hard landing, which I do, what do you do with 2-year treasuries at a sub 4% with Fed funds at 5.25? I better be right of my hard landing if I want to own fixed income. And then in the longer end, historically, this is easy. If I believe we're a hard landing, I'm supposed to own bonds. But they're not exactly a screaming bargain. 10 years at 3.5 in the U.S., particularly with a Fed that has certainly shown some mettle in the last year, but historically, I wouldn't say Jerome Powell is a profile in courage. So if we get into a hard landing and he moves aggressively, I could see bonds and inflation coming back with a vigor from what I expect to be a lower level than right now. I will say that the response to Silicon Valley unnerved me a little, because in 4 days, they printed enough money that basically wiped out the entire reduction in the balance sheet they had done for 5 or 6 months. So if I'm trying to look ahead and anticipate, I don't have a lot of faith in these guys, should we get into a hard landing, that they're going to hold the line and not do something maybe worse than Arthur Burns.
That terrifies me. That terrifies me that he sees it that way. He sees there's potential for them to be Arthur Burns, and that's the first outcome he describes. Keep watching.
And where does it leave equities?
I think equities are really complicated. I think within the equity market, if you put a gun to my head, I'd be short the economy to the extent I should something pure like Russell 2000. Obviously, I don't want to go into individual short names, but names like that old economy, economically sensitive stuff. But let's just say we're going to have a hard landing and a bad recession in the U.S. What does that mean for NVIDIA? I don't know. I mean, oils and chemicals went up in 73 and 74. Staples have gone up in bad recessions in the U.S. historically. What do I do with a company if you have a bad recession in the U.S., but it's growing wildly throughout that period because we have an arms race going on in its space? It's not clear to me it goes down. So I think the equities are complicated. I mean, I'd say the one area that I feel reasonably comfortable in is I'm short the eye.
You hearing what he's putting down so far? That was just absolute gold. If you didn't catch all that, rewind about a minute and a half, and listen to all that again, what he said. He just laid out a lot of things, and the first thing he talks about is a hard landing and a bad recession. And then he goes into the gold of, or the gold information nugget-wise, what he would get into. He didn't look like individual stocks, like NVIDIA, nothing against NVIDIA, he just used it as an example, because of how it could do very well, even though we may be in a really hard landing recessionary period because of what all it's used for. So what he's going to say he's interested in, I believe he goes on to say it, is more of a broad basket, like, say, the S&P, right? If he's going to take a short or something like that, but he's going to describe more things. I just wanted to remind you how much gold he is dropping right here. And then what he says next, very powerful.
United States dollar. Currency trends tend to run at least 2 or 3 years. We had a long one here.
Let me rewind that just a little bit.
I don't feel performance pressure. So historically, I deal in 5 or 6 asset buckets. I'd say the one area that I feel reasonably comfortable in is I'm short the United States dollar. Currency trends tend to run at least 2 or 3
short the United States dollar. That's what he said.
Years. We had a long one here, over 10 trillion, something like 13 trillion came into the U.S. dollar during the previous decade. I will say, full disclosure, I missed the dollar. Probably the biggest miss in my career in currency trades. I missed the last 9 months run up in the dollar. I just couldn't bring myself to own Joe Biden and Jerome Powell. But I think now that on a relative basis, the tightening in the U.S. going forward will not be as much as the foreigners. Now that we've weaponized the dollar and you've got people like Lula running around asking why we need to be trading in U.S. dollars. By the way, it's not a bad question. Historically, we could be trusted. We had a rule of law, a lot of things. So about the only space I have any risk on right now is in the U.S. dollar. don't run out in short dollars. I could change my mind in a week, but that's where I am right now, and I'm also long gold, obviously, for the same reasons.
But just to come back to this, so you say you haven't seen it as problematic for 45 years, and it's really complicated.
Long gold, too, he said.
So what do you do then? You sit in cash, or?
Oh, no, I'm too. I'd like to say I sit in cash, but I'm too much of a junkie. I'm always doing something. I'd say our equities were about 3% net short, which is nothing. But again, there's always equities we like versus other equities. Our fixed income position is minimal, except in JGBs, where I don't know whether I'm going to get paid or not, but I think the risk reward is ridiculous. It reminds me just a little of the 2 years ago. They have an inflation problem, but again, I'm dealing on government action. So it's not cash. We got stuff going on, but I'd say my P&L doesn't move generally more than 30 or 40 basis points a day. That's how buttoned down I have what I'll call our matrix here. Our matrix being the buckets I talked about and the investment within those buckets.
Yeah. Well, you'd be pleased to hear that I'm joined by roughly 200 junkies here in Oslo who also think it's difficult to not do.
Important to catch what he said there. He's only in about 5 or 6 buckets.
A podcast with Steven Schwartzman from Blackstone, and he has one of his 25 rules not to lose money. And so I mentioned to him, I said, isn't that a bit of a lame advice? It's a bit obvious. But you are kind of in the same camp, aren't you? I mean, I think you never had a down year, and you are pretty...
Never had a down year in 30 years. Like I said, legendary GOAT status. Everyone listens to what this guy says. There's no one that says, I don't care what he has to say about it. Come on. You hear someone say that, they're foolish, get away from them.
That's so important. I mean, it's a lame question, right? But it's actually not that lame. But let's listen to you.
It's just mathematics. If you go down 50, you got to go back 100 to get it back to even. And I've always thought the way to build a long-term track record is when you really see the ball swing really big, and when you don't see the ball, don't swing. And if you can build a record, and when your terrible years you're up 0 to 5, and then throw a couple 50s and 60s in, the numbers look pretty good over time.
Are you getting that? If you didn't get that, rewind like 30 seconds and hear him say that again.
If you make a bunch of 30s and then you lose 55 or 60%, you got a long way back, and it's just the way the numbers work. Also, I'm a sore loser. I don't like to lose. So that kind of helps out too.
Just remind us of your compounding.
Wow.
Well, when I had clients, which is the only audited record, it was just a little bit over 30% net a year for 30 years.
Wow. Do the math on that. Wow.
That's pretty good.
But again, the top year was 99%. I had a lot of 5 and 7s in there. I didn't like 20-30% every year. It was a matter of never losing and then throwing some big numbers in there, maybe 10 times.
Yeah.
Wise.
Well, that sounds like a plan for the fund here as well. Now, tell us, how do you, when you invest, how important is the analysis and how much is now gut feel or pattern recognition?
Yeah, I don't know who, but I heard a saying, with analysis comes paralysis. And, or Soros used to say, invest and then investigate, which I was already doing before I met him. But it's more important now even than it was then. We're in such a fast-moving world with all the new communications that if I get an idea and I think it's attractive, and for whatever reason that security price will be higher in a year or two, I generally go ahead and buy it and then tell the analysts to look into it, and if it turns out I was wrong after they analyze it, I get out. I don't like to wait around. A lot of my best ideas, I'm not that smart, so if I see it, whatever's going on to cause that idea to happen, someone else might see it, and by the time we get done analyzing, I will miss 30 or 40% of the move, and then I'm paralyzed because it just went up 30 or 40%, and I don't have the guts to buy it even if I think it's going higher.
Just gold. Just absolute gold. This is him describing the way his thought process is. And I got to say, watching this, it's definitely not what I expected, right? In a lot of logical things, he's saying, listen, I'm really low risk. I don't lose money. I only swing when the pitch is huge and fat and it just, I see it big time. And unless it's that, I don't swing. Wow. And then he says, invest and then investigate. So he gets in there, right? Because he says, hey, I don't expect to be the smartest, sharpest, fastest guy in the market. So when I see something, I got to act. And then that gets me in early in case I was right. And then I investigate really fast. And then I decide if I want to stay in the position or get out, even if he takes a small loss. I mean, think about that. That is something I'm going to have to think about a lot more. That is such a fascinating way of looking at all this. Because think about it, you've probably had times when you had an idea or you thought of something or you thought of a crypto coin or a stock or some kind of trade, something, and you hesitated and then it shot up and then you came in later and you bought, close to the top. Instead, he put in some money. He investigates real quickly to make sure to see what's going on, give it a little bit of a test track. Part of the investigation is what happens next in price action. Does it go down? Does it go up more? That's part of the investigation, is getting in and seeing what it does, along with investigating what it is and if it's sustainable, et cetera, if it's a good one.
We're more in the camp of if we got a strong feeling, we'll cut the analysis short, and then by all means do our analysis thoroughly and then just unload it if it turned out my thesis was wrong.
Do you depend more on this type of pattern recognition than you did in your early days?
No, I started in the 70s, and my mentor turned out to be a chartist, and I still use that to find things others may not be looking at, because we use rate of change stuff that tends to lead, and B, if I do take a big position, it's a great check on me not falling in love with security or falling in love with my idea, to have those charts as part of this discipline. He used to say, if there's 6,000, well, I don't know whether it's politically correct when we say, if there's 6,000 girls out there you can date, you can always find 20 that have a good chart and a good fundamental story. So if either one didn't fit, I wouldn't do it. So the technical provides a discipline on the fundamental, and the fundamental provides a discipline on the technical.
Now, I believe that one...
Just dropping gold.
The hallmarks of a great investor is to be stubborn, but at the same time agile and being able to change your mind, and you have that incredible combination. Now, how do you question your own beliefs?
Price action is important. I try to have young people around me who are not afraid to speak their mind to me and argue with me. If somebody's here too long and they agree with everything I say, they're not here that much longer, because I need healthy debate. And but we're constantly following the news, we're following the fundamentals, and also the price action. I will say, since the
healthy debate. Healthy debate. Let me tell you something. There's three things. There's perception, perspective and reality. Each of us has our own perspective on how we see things. We have our own perception on how we see things. And when we can see other people's perceptions and looking at things from different angles, that gives us perspective and helps us come closer to seeing objective reality. Healthy debate. Because we can get caught up in an echo chamber of looking for people to say what we want them to say. We can find all kinds of stuff to support it, but unless we really examine both sides, all sides, we're stuck in a perception rather than getting perspective and getting a better view of objective reality. I hope you got that. That's been very helpful for me.
Goes and everybody got involved in factor investing and whatever's going on these days. Price action is not what it used to be 20 or 30 years ago. 20 or 30 years ago, if a company reported a horrible result and it opened down, say, 10% and ended up on the day, you could almost guarantee that stock was going to be higher in 3 months. It's not the case anymore. Everybody seems to know these tricks. I've seen that action, and then a month later, the stock's right back down again. So a big part of my process, which is price action versus news, I obviously still watch it. If I've got a thesis and it's really bullish and it's playing out and the stock's not going anywhere, it makes me go back and check the thesis over and over. But price action versus news is not what it used to be 20 or 30 years ago, probably because the competition has learned the same game. Whereas when I got in the business, you didn't have that many people that had it as that big a part of their process.
So is that the passive capital going into the ETFs, or is it actually the the AI algo traders and so on?
I don't think it's so much the passive. I think it's very active hedge funds that learned the same stuff doing it, and obviously these factor investors and algos and quants, definitely they'll really mess up what used to be historical price action versus news and its message. A lot of people in my position complain about them. To me, it's just a new world I got to deal with. People got to deal with me. I might as well have to deal with them.
Very good. So lastly, Stan, if you were to leave us with some good advice here, how are we going to make the most money for the next 2 years?
Oh boy. I said something that the press ran with, I don't know, 8 months ago, maybe it was a year ago, that I wouldn't be surprised if the stock market was not higher in 10 years. I still believe that. But I do think, like the 68 to 82 period, will have some big swings. So I think the way to make money the next 2 years in the equity space is to be patient, because I do think we have possibly some rough roads ahead, and I do think the central bank will respond in some crazy way that will give you a period like 70 to 72 where you can make money, or 76 to 78 when you could have made a lot of money. And also, for me at least, I think the currency markets are very interesting. But I think this is a movie I've never seen anything like it. So I'm going to be very careful not to dig myself in a hole when I don't have a strong belief to come out, because I think the opportunities are going to be amazing as this movie unfolds in the next year, in macro and in equities.
Great. I think that's a fantastic place to end. It ties in with what we heard here today, that the world is changing. We've never seen it before. It's a shift. It's a paradigm shift. We're going kind of through a new door. We are in a bit of a vacuum. So big thanks for sharing your thoughts with us today.
Thank you.
You may want to watch this video again, because everything he just said is just so good. And hopefully my commentary added at least a little sprinkle of extra value on it. Thanks for watching. Hit the subscribe button. We'll have more of this stuff coming out. Thanks for watching. And be careful out there.